What's up, everyone? This is Dan French. This is Wealthytainment, and thank you guys for tuning into my channel. If you guys don't know what this channel is about, it's about entrepreneurs, financing, and also hot topic or articles that have come out that I want to discuss, and a lot of topics that's out there in the news that people have interest in. I also want to bring up everybody out there that's subscribed. We had a lot of influx of subscribers recently, and I appreciate everybody out there that's helped the channel grow. All the comments, please help the channel keep down that road of growing. I appreciate every one of you. Now, I do a lot of research and I look for different topics and things that people have or might have interest in, that I have interest in as well, that I want to talk about. And obviously, one of the topics that keeps coming across my desk is a economic crash or a stock market crash. So I want to discuss that today because there's a lot of people out there, that talk about crashes and economic crashes, and it's about to happen, and go invest into gold and get your survival kit out, and we're going to get this going. What is his name? Peter Schiff and also Robert Kiyosaki. They discuss a lot about when this market crash is going to happen, and it's imminent on this happening. Also, I came across this article about a person that has high interest. I had high interest in because of his prediction of the 2008 market crash. The housing market crash. His name is Michael Burry. And if you guys don't know who he is,
it's Dr. Burry. Looks like the collapse of the financial sector is imminent. I start to sell my position. It's 1.3 billion. Sure, I'll hold.
So he came out and he basically predicted that, the market was going to crash. He put his money, into predicting that there was going to be a financial crisis. A lot of it was because of bad loans written for a subprime mortgage, right? There was a lot of investors and a lot of banks that were holding a lot of subprime loans, and they were going to collapse. A lot of it was because of the investors pulling out trillions of dollars at one point, and the Federal Reserve had to come in and stop that from happening. And so when you look at his situation, he made $100 million off of that investment. And he's now, I did some, what is Michael Burry's net worth? 300 million I saw. And then there was another website that said he was worth 1.2 billion. And what's interesting is he came out and he was putting in this article, or he talked about this, what he's going to plan to do here. Michael Burry, the big short investor who became famous for correctly predicting the epic collapse of the housing market in 2008, has bet more than 1.6 billion on a Wall Street crash. Burry's fund, Scion Asset Management, bought $866 million in put options. That's the right to sell an asset at a particular price against a fund that tracks the S&P 500, and $739 million in put options against a fund that tracks the NASDAQ 100. Burry is using more than 90% of his portfolio to bet on a market downturn according to the filings. So he's all in. He's actually predicted that this crash could happen, this stock market crash could happen in December, which is right now. And he's put 90% of his portfolio predicting this. And so, again, it comes down to, you have a lot of investors out there, people that are watching stock markets and saying this is going to crash or there's going to be a collapse at some point. Now, there's also a lot of investors, talking about recession. They get that question asked a lot. Do you think we're going to go into a recession? The Warren Buffetts and the BlackRocks, the Blackstones, these big corporations, they get this question asked. This is what we talk about when we think about a recession, and a lot of people were saying it was going to happen in 2023. So prepare for the U.S. global recession in 2023. The debt is just not sustainable. So we have a financial crisis looming here in the U.S., and you look at the stock market, it was supposed to crash in 2023. And the dollar's in a bubble. The Federal Reserve is printing money. And also you're looking at China. China's holdings on the dollar. We're at a trade war, at a war as far as financial power. Who's the global power between us and China? And you look at our relationship with China. They don't want to sell our debt because we're all connected. The U.S. debt is now $33 trillion and counting. And it's clearly likely to happen that people are going to focus on buying gold and silver and potentially, looking to buy Bitcoin as a result of where the financial crisis is at today. So you can see that there's a lot of speculation and talk about how this recession could lead to an economic crash. And this has been brought up a lot. We also had Warren Buffett ask that question during an interview, and I want to bring up what he had to say about it.
But you think a recession is more likely now than maybe you would have said 6 months ago?
Well, I think most of our managers would say that they are surprised at where they are now compared to how they thought they were going to feel 6 months ago at this point.
And
in a lot of
pleasantly.
businesses, but not in the insurance business, you know. But I think the people at the railroad are somewhat surprised that car loadings aren't a little higher rather than a little lower, you know, somewhat lower. But most of the stuff we carry is essential, but it reflects what's happening. And of course, supply lines were so disrupted and everything a year or two ago that, you know, no economic figures are pure, but I'm just telling you my impression. I look at the numbers every day. I mean, I look.
In terms of the potential for a credit crunch coming through what the banks are going through right now, there's been a lot of speculation about what that could mean to the economy. Is it going to mean a 0.5% hit to GDP? Is it going to mean a 1% hit to GDP? What would you guess?
I would say that I've been in business running Berkshire for 58 years, and I've never found economic forecasts of any use to the company. And all we have to do is keep running every business as well as we can, and we got to keep plenty of cash on hand so that people can keep making intelligent decisions rather than those forced upon them. And that's all we know how to do. And if I depended in my life on economic forecasts, you know, I don't think we could make any money. I don't know how to do it. And you know, people want to get them, so they get them. But
So you can see what he had to say, right? He basically came out and stated that economic forecasts, it's hard to predict if there's going to be a market crash, but if you follow that route, I think it's a lot of negative energy, but you're not going to ever have any production because you can't just sit there and think that, okay, the market's going to crash, we need to make adjustments. You got to continue to run your business accordingly and just kind of put some shield on as far as, you know, you don't want to think that it's not going to ever happen because it could happen, but I'm here to say it's the likelihood of it happening is not there, at least at this time. And what he's saying is just kind of keep moving forward. You can't just, you know, stop or have some type of setback or feel like, hey, you know what? I think things are going to start to slow down, or I'm starting to see signs. Maybe we should stop doing our, you know, running our business. He runs his business the way it should be, which is you keep going and you keep trying to grow and becoming bigger and better than what you were. Now, I also want to bring up the confidence in people today and what would create a market crash. So I agree with him in the sense that with what he had to say. Now, for me, I'm looking at it going, okay, this market, what are the key factors that would actually present an economic crash, right? Some of the key factors are people losing confidence in an economy. Well, that's not happening here, right? The U.S. economy is very strong as far as confidence goes. We hit in 2018 it was like a 19-year high on consumer confidence or just confidence in the economy. Investors also are very confident in this market or in markets here in the U.S. You know, for them to get repaid on their investments, it's very high. Even though we know that debt is high, you know, it's alarming. It's something we have to consider. Yet investors still feel confident they're getting repaid. We are a debt-based society, and we've seen these numbers consistently go up. And so we get it. You know, is it something to pay attention to as far as the debt goes? Yes. But are there signs that says investors just don't feel that they're not going to get their money back and they're going to get repaid? No, there's not. Then you go back to China. China has a lot of our debt. They hold a lot of our debt. And globalization is here. We're all intertwined economically. So China or Japan, especially China, is not going to just pull all their dollars and say, okay, we want you to pay back your debt, because ultimately that would collapse us as an economy, but it would also collapse them. And it would collapse other economies that are on a debt-based society like us that hold our debt. So that's like the likelihood of that happening is just not there. Also, I want to bring up the dollar. The dollar declined 58% from 2002 to 2008, and we're still fine. I mean, the dollar now is very strong, but we've seen a weak dollar before. That would probably happen before a full-on economic collapse. Now, let's talk about unemployment, right? Unemployment is very low right now. I think we're close to 4%. But did you guys know that in 2008, we were close to 15% unemployment? And if you look at the Great Depression, the Great Depression was at 25% unemployment. People have confidence in the economy. They're going to continue to go work. We see it. It's showing, right? So there's confidence, and that's probably the biggest attribute of why an economy keeps thriving, is because the confidence in the investors, confidence in the average American, in this case, are in the markets. They're going to work. They're paying their bills. Yes, we've seen inflation. Hyperinflation is a concern, but with the Fed pulling in the Fed's fund rate, increasing it, now they're saying they're going to drop it in 2024, probably midway in 2024. They're probably going to be able to do that. So you got to think that these things are important. Now, the other thing I want to bring up, what investors are doing with the S&P 500, and also with what's going on with GDP, which is the health of an economy. So when you look at I want to give you these charts here really quick. The GDP is up. S&P 500 is up. That's a big reason of why the economy is doing well. You have investors like BlackRock here, and Warren Buffett, and these are big stock market investors, people that hold a lot of weight here. Corporations, George Soros, which is a very controversial person. Also, Blackstone. These guys represent these corporations, and these corporations are the ones really driving the markets. If they have confidence, they have a lot of money into these investments. They're the ones that's going to really pull the strings and make things turn. So you got to think that if they're still investing and they're still having their money in the U.S. economy and investments in the economy, then they have confidence here. And I think that's a big thing. So when you go back, and let's talk about some of the things that I remember back in 2007 and 8. Back in 2008, when Michael Burry, predicted this, nobody had a crystal ball. Nobody still has a crystal ball when this is going to crash. I told you there's a lot of gurus out there. You got the Peter Schiffs and the Robert Kiyosaki's thinking that there's going to be some type of crash, and there could be. I just don't see it happening anytime soon. But you have to think that with all the data that's out there, I remember people that were like, "Oh, I'm never going to buy a house after the crash happened," right? And I'm like, "Why would you not buy a house? You could buy it pennies on the dollar." They just had no confidence at that point. But guess who had confidence? The investors. Big investors came in and bought large amounts of properties and were, renting them out. They stored their money there. They obviously pumped money back into the economy and ultimately made a lot of money off that. I used to do a radio show and people used to call in, "Man, we're going to collapse, and stock market's going to collapse." And you know what? It could. The stock market could collapse. But what we've seen from history is that these markets always recover. It doesn't come to just a complete collapse. A lot of people want to turn to gold and silver, and there's nothing wrong with that. Bitcoin, safe haven, I get it. They're alternatives. But the dollar is still here, and it's still primarily used. And until that goes away, until something changes, with all the data and all the information that I'm seeing, I don't feel like there's going to be a crash or even a stock market crash, economic crash, anything, just because of the confidence. And that's the number one thing in the U.S. economy and how we're globalized now as an economy. Everybody's connected to the U.S. If you guys have any questions, please leave any comments. Again, I would love to answer any comments that you have, any questions you have. Subscribe to the channel, and appreciate your guys' time. We'll see you guys at the next one. I'm out of here.